Today we have Chris Broad with Sahori Insurance joining us today to go over package versus standalone crime and D&O coverage. We will leave time at the end for Q&A. Feel free to drop questions in the Q&A section. And now I will turn it over to Chris. Chris.
Thank you very much, Sarah. Good afternoon. Like Sarah said, my name is Chris, and today we're going to be discussing two very important coverages that are essential to your community association and making sure not only you guys are protected, but the community's funds as well. And there's two different types of coverages that kind of get categorized in D&O and crime. There's standalone policies, and then there are packaged policies, which are kind of an add-on to your package policy, which is general liability and property coverage for your community. So without further ado, I'm going to get into this. All right, really quickly, before we get into it, just to give you guys a little background about myself and my company. I have been with Sahori Insurance for coming on 3 years now, and I'm a commercial risk advisor specializing in community associations. I hold my CISR designation from the National Alliance of Insurance, as well as my Educated Business Partner designation from CAI as well. So, some quick highlights about our program. We're specialists in the community association space. We insure over 800 communities in the DMV area. Our goal is to make sure that this process is as easy as possible for your property managers to get a second opinion. Because the thing about us, we're an independent broker. We have access to many different carriers. And essentially, every broker has different carrier appointments. So we're always going to be here to provide a second opinion on anything that you guys have that coming up and giving you guys kind of some guidance on your renewals. And then these are our fancy little badges that we have right here. We're Diamond sponsor in the Chesapeake region, as well as members of the Central Virginia chapter, as well as the Washington, D.C. chapter. So to start, we're going to begin by taking on the D&O coverage for your community. And so as you see here, what is directors and officers coverage? So D&O coverage is there to protect both the board of directors and the property manager when their decisions are challenged or they're accused of failing to meet responsibilities. Oftentimes, when you're making decisions with a volunteer board member group, members of the community will have lawsuits or complaints that come around. And obviously, when someone's volunteering their time and the property managers are helping out the community, you want to make sure that the entire community is covered in the event that there's a disgruntled homeowner that feels the need to bring something out from the same point of legality. Continuing on. Now I'm going to get into really quickly some of the differences between packaged policy, directors and officers coverage, and standalone directors and officers coverage. So packaged directors and officers coverage typically come at a lower cost to the community. And while this could be advantageous from the standpoint of saving money, there are a few things that I'm going to discuss below when it comes to the differences in coverages. We typically see package directors and officers coverage coming in at around the $250 to $700 range for a community, whereas standalone D&O comes in at a higher premium of 700 to we've seen 3,000. And oftentimes these policies are rated on the number of units in the community. Obviously, more units, more homeowners that could potentially find the board to be not doing up to what their responsibilities are. So I'm going to go ahead and run through package directors and officers coverage really quickly for you guys. And so some of the important coverages that you want to see and look for on your package policy are defense costs, discrimination coverage, monetary damages, failure to procure and maintain insurance, and breach of contract. Really quickly, I have italicized discrimination coverage. This is due to the fact that this is the third most common claim that community associations see in the insurance space when it comes to directors and officers claims. And if you'll notice here where I have highlighted, it's often excluded in a package policy. And a quick disclaimer about that before we really get into it. Every insurance policy is its own individual contract and varies base by base. So you're going to want to have a trusted broker work with both you and your property manager to make sure that we know what is included and what is not.
Chris, could you go over
So
what
defense costs are
discrimination?
typically included within the, yeah, of
Could
course.
you go over
Yeah,
what
so a discrimination claim
discrimination
essentially,
law?
what
There's
was
a bit
that?
of a
So,
lag.
come again?
There's a lag in your internet
Oh,
happening.
there is. Is it
Yeah.
good now?
You keep going in and out. But if you could go over like what a discrimination claim is,
Yeah, of course.
kind of a broad topic.
And yeah, Chris brought a topic. No, kidding. So I can go ahead and cover that. So a discrimination claim typically arises from when a homeowner feels that they're being treated differently than other members of the community. And to give a quick example of something that I've seen in my day-to-day work is there is a parking spot allowance for certain members of the community per unit, and a person with a disability thought that they were being discriminated against due to the fact that there were different policies being enforced on them due to their accommodations. So eventually, what happened was the directors and officers coverage that we had covered this claim. And I also have some more examples later as we get into kind of more of the DNO and everything. So, am I still good on internet?
Yeah, it's a little bit better.
Okay, awesome. Hopefully that stays up. So, continuing on, defense costs typically inside the limit of liability. So your D&O policy will typically say directors and officers coverage up to $1 million limit, and then you'll have something called a retention, which is typically $1,000. So you can think of a retention, like other insurance policies, as your deductible. That $1,000 is what you will essentially be responsible for in order for your directors and officers coverage to be enacted. And so typically, if a lawsuit is dragged out, obviously we live in a hyper litigious society where people oftentimes find reason to sue for anything. If this process is dragged out, you will only have coverage up to that $1 million limit. Whereas in a standalone D&O policy, they typically include separate limits for outside the limits of coverage from the standpoint of the legal costs for the community, as well as when you see kind of all these other categories of coverage, it's much more comprehensive coverage for the community. These policies will have specific line items that respond to different types of D&O claims. Continuing on. Just to re-highlight again, the role of D&O coverage in community association. This is an integral coverage. We recommend it on for every community that we have, from the smallest HOAs to large condominiums. The limits will differ, and if you were to recommend a packaged versus standalone, that will also vary based on the size of the community. But this protects you guys. You guys are volunteering your time. We want to make sure that if there were to be a scenario where a lawsuit occurred and someone was trying to go after you, that the community association manager and the board are protected. So we have the packaged DNO and standalone DNO, as I said. So the standalone DNO, which I'll highlight, is a dedicated policy to DNO that will have broader limits and less exclusions versus the packaged. So this is where we're going to get into a claim example. So a unit filed a formal complaint against a board for discrimination due to selected enforcement of a covenant. And essentially what this means is that the homeowner felt that they were not being treated fairly within the governing documents of the community. So if there was no coverage or package coverage, that means that the community board member who had made that decision or was being accused would have to essentially stand stand on their own, and the community would have to pay these costs out of their reserve. Because obviously, like we mentioned before, discrimination coverage is oftentimes, I've only seen it on maybe one or two package policies, it's oftentimes excluded in the subjectivities of the policy. So, how can community associations be proactive to go ahead and prevent and reduce risk? There's no way to obviously eliminate legal risk when it comes to community associations and almost anything in life in the world that we live in now. But between the association's council, the insurance brokers, and board members, it is important to have collaboration regarding all the different types of whether you're amending your bylaws, whether you're going to be doing community updates or anything like that. And then you want to always have people join your board meetings, whether it's a attorney or a insurance broker, to make sure that the board is educated. And another thing that you can do to kind of add on to this, EJF is a member of CAI, as are we. It's important to see that your community association manager is working with vendors that are CAI certified and members, because they know the arena and what you're going to be dealing with better than anyone else. So I'm not going to go ahead and run through all these here, but this is just kind of something that is from one of our carriers, E&H Graham Insurance. And we write a lot of standalone D&O policies with them. And you can see here all the things that they are able to provide. And obviously, it's one of those things in life. You get what you pay for. These are typically going to be more expensive than any package policy. But when it comes to a time of claim, that is when you're going to be the most glad that you have this coverage. Right. So we just talked about D&O coverage, and now we're going to go into what crime coverage is. So crime coverage, also known as employee fidelity and employee dishonesty on policies, is intended to protect the community's financial assets. And so, in short, this is something that will protect the reserve accounts, the fees, and everything, in the standpoint that there's a crime where they're basically stolen, or maybe a vendor doesn't fulfill their duty. Some of these types of events are called a embezzlement, computer fraud, forgery, counterfeit currency, social engineering, and more. Oftentimes now, with the appearance of AI in this world, there's going to be like fake videos of someone asking for money or something like that. And oftentimes these crimes can be perpetrated. And typically, your standalone crime policy will have coverage for things such as social engineering and all that good stuff. Whereas a package policy, much more exclusions, and definitely not as in depth when it comes to the standpoint of what you should be covered for. And then if you're in a condominium, it's not as prevalent for HOAs, but to be compliant with FHA loan requirements for all of your communities, the community is required to carry a limit of the total of all their reserves plus 3 months of their assessments. FHA and Fannie Mae originally set this to comply with their requirements for condominiums, and as a best practice, it's also good for it to be used for HOAs as well. So looking here, you can kind of take a look at what the differences are between a crime policy that is packaged versus a crime policy that is a standalone policy. And the best part about a standalone policy is that your broker can go ahead and personally select your sublimits and your limits and tailor your coverage to whatever your needs are. One of the line items that we often ask about is there's an option to add coverage for money on the premises of a community. If your community doesn't have any money on the premises, we can go ahead and take that coverage off as it's not needed and go ahead and provide some premium savings on the standalone policy. So these are the two options we have included on the package policy or by purchasing a standalone policy. When included on the package policy as an endorsement, you likely get increased limits for the employee theft and dishonesty, and that will satisfy the legal requirements for FHA certification, all that stuff. But like you can see here, forgery and alteration, computer fraud and wire transfer fraud, theft, disappearance and destruction, money orders and counterfeit currency, and social engineering are oftentimes excluded on these policies. And like I said before, these are rated on the amount of coverage versus units. So from the standpoint of what limits a community needs, that will be the difference there that you normally and typically see. Yeah, and then that was pretty much all we had today. But I want to make sure that we have time to kind of answer some questions and kind of delve deeper into anything that may have came up from the standpoint of questions from anyone on the board.
All right. The question section is open for anyone who wants to drop a question.
And just really quickly, I'll list a couple carriers that we use from the standpoint of crime. There's E&H Graham, Kevin Davis Insurance, Starfish, and Distinguished Programs. So there's a lot of options out there for communities to get crime coverage. And yeah,
Okay. Not seeing any, but can I ask you a question about workman's comp? Because this seems to come
yes,
up all the time.
yes, of
Um,
course.
does an association need workman's comp coverage?
Yes, so it's not required, but we highly, highly, highly recommend it. Even if they don't have any direct employees, workman's comp coverage, if any, comp coverage will be there in the event that, let's say, a volunteer event is happening on the premises, or a contractor fails to pay their premiums and they have a lapse in coverage. At that point, the community will be on the hook for that. So that's why it's important to carry workers' compensation coverage. Oftentimes, if you don't have any employees, it'll be called, if any, workers' compensation coverage. And we have plenty of carriers that we use for that. My favorite is Pennsylvania Manufacturing Association. And typically, what you'll see is someone's like doing a trash cleanup or perhaps doing like some type of renovation on the community, volunteering their time. So they're not technically an employee, but the community can still be held liable if an accident were to happen pertaining to them.
Like a board member changing a light bulb and falling off the ladder?
Exactly. Yes, 100%. That is a perfect example.
Okay. What if a homeowner is doing work in their property and they have an uninsured workman?
Yep, 100%. So, first of all, to kind of head off that, we recommend that every community, even when it's a unit owner getting work done, always require 1 million occurrence, 2 million general aggregate limits for all contractors and making sure they're licensed as well. But in the event that they are not, that is when the workers' compensation coverage, if any, or any type for that matter, would come into play and provide coverage.
Great. I do have a few questions from the chat. So,
Awesome.
um, who should we ask to find out which coverage we have?
100%. Yeah. So there's two ways you can do it. First, to always ask your community association manager or your insurance broker that they work with. But if you actually take a look at your certificate of insurance on your Accord 125 form, there's going to be line items for your different insurers. So typically it'll be like insurer A. That is going to be your package policy. And then when we do standalone options for a community, there'll be insurer B, insurer C, insurer D. And typically that will be your crime, D&O, umbrella coverage, as well as workers' comp. So if you take a look at your COI and you see that you only have insurer A, obviously you will have the coverage for your community. It's a requirement, but that means that you will probably have the package option unless there was a mistake in the generation of your COI. But you can always just ask your community association manager or your insurance broker that they're working with.
And I work with a variety of insurance brokers, and they're generally very happy to come and chat directly with boards at board meetings or just have a general call in an informal manner
Yeah.
because they want you to be educated on what you're purchasing um, because they make recommendations and
Yeah,
the
100%.
reason they're making recommendations is to help protect. So, like, if any workman's comp is something that I've seen come up personally several times where a board will ask me, do we really need this? I'm like, yes, we're not required to have it, but the $500 or so, it's not a very expensive policy, could save you
Yeah.
millions of dollars if somebody falls off a ladder and breaks their back or something, which we've
Yeah,
had.
I agree. The workers' compensation coverage is kind of in the same avenue as your umbrella coverage. It's just such a good coverage enhancement for a community to have. And it's one of those things, the premium is very minimal at the time. And then, for example, an umbrella, you could get another additional $1 million of coverage for as little as $600 or so. Obviously, the higher limits you get, the more expensive it will be. But from the standpoint of your umbrella coverage, that will go over all your policies, whether it's your directors and officers, your crime, or your general liability limits on your policy. So it's one of those things when you're kind of working together as a board to maintain and protect the shared value of the community and its assets. It's one of those things where it's a no-brainer. It's something that next time you're coming up for renewal or next time you have a board meeting, ask your insurance broker to come and kind of lay out all the different options for the community. Really quickly, just because that also kind of jogged something in my memory. Cyber coverage is a big one that we're seeing now. And oftentimes, cyber coverage is something that's overlooked because it's obviously another line item, an additional premium. But nowadays, with everything being handled online, whether it's payment of invoices and everything like that, we have been recommending more and more times cyber coverage for communities. And this is all something that your broker can kind of look out for you and recommend, obviously.
Okay. I have more questions. So,
Awesome.
this is from a new board member. Um,
Mhm.
what should they be asking of their insurance broker when they're doing the renewal? Like, what are some good questions to ask to ensure that their property is getting the coverage that they really need?
Yeah, of course. So there's two kind of a two-pronged approach to what you should be looking for as a board member on your renewals. Obviously, you want to make sure that your limits are being updated to meet your community's needs. Let's say you had a renovation and you added some amenities. You want to make sure that those are added onto your policy, as well as if your reserve balance has changed, you want to make sure that your crime limit is being updated so you can get that FHA certification. And then from the standpoint of marketing and where your community's insurance where they're getting their coverage from and where it's placed, oftentimes what we will do if we have a renewal where the board is concerned about not being in the best spot, we'll put together what's called a marketing summary. And essentially what I will do is I will go to all the carriers that we have access to at Sahori, which is around 80 or so carriers, and so essentially, we will obviously leave out the ones that are not going to be fitting the community, like the community's appetite. So, for example, some carriers don't write business for frame construction that's not sprinklered over 4 stories. So I could call Jeff at whatever insurance company, but he'll just tell me to kick rocks. So like I will obviously leave those off. But so I'll put together a marketing summary and essentially I'll be like, hey, Erie Insurance, they indicated at 78K and you guys are currently paying 56. So we did not pursue that quote. And essentially, what that will do is not only show you what options you guys have, but also just kind of put the power back on you as the community association to make sure that your broker's crossing all the T's and dotting all the I's.
Okay. Here's one, cyber coverage. If
Hmm.
EJF's computer is hacked and our data is at risk or stolen, is the loss coverage under our policy or EJF's?
So we, as a community association insurance specialist, we work with a lot of property management companies, and cyber coverage is one of the things that we recommend and have for all of our property management companies. And I'm not directly familiar with EJF's policy, but I'm very certain that they have a cyber insurance policy that carries high limits. And Sarah's nodding her head yes. So
Yeah.
you would essentially, if EJF's computers are hacked, you would be covered from the standpoint of their cyber limit.
Mhm. And also, just for general information, we have micro trainings for
Hmm.
all of our staff on a biweekly basis where they get little videos and tests because it is evolving the ways that people are trying to get into systems. So we are very much pr training our staff and helping prevent possible slips. Um,
100%. Yeah, the best loss is one that doesn't occur, and that's kind of back on what I said with the social engineering coverage, which is an important coverage to have on your crime. Like I said, like in today's new age, like even voice manipulation and recognition, it could be a call from Mima saying, "Hey, we need money," and it's like, "What?" It's like this sounds exactly like her. But yeah,
Or attachments from emails that look kind of like the email that you received, which when
yeah,
we get those, we actually have a system where we flag them so our IT team can investigate further to prevent those things from popping through to us.
awesome. It's like, "Hey, can you open this attachment?" or something like that.
Thank you.
So it's like, yeah. Well, that's when always it's the trust but verify. So like hop on the phone, "Hey, did you mean to even send me this?" And they're like, "What? No, I'm on vacation in Florida." It's like, oh, well,
Yeah.
there
And one
you
of
go.
the things is I have a community where I had to wire, I don't know, it's like a lot of money, 35K for a
Hmm.
project. And
Yeah.
we have a process where if we have to wire any money, we're not going to call the person on the form. We're going to look them up online and call their actual company directly and voice verify.
Hmm.
And unfortunately, it was a huge company, so it took internally the staff a bit of time to get somebody live on the phone to verify this one wire transfer. But it's so
Yeah,
important because otherwise we could be wiring money to somebody we don't know. Same thing with
definitely.
vendors setting up ACH. We verbally confirm it, not with the information that's given, but the information that we can readily verify. So,
100%. Yeah, I definitely agree. And this is one thing I will say about EJF. EJF is a great property management company. And so it's one of those things where it's like you really want to work with a community association manager that knows what they're doing with tons of experience and safeguards in the industry.
okay. I did not pay Chris to say this, by the way. So, um, all right, next one. Uh, would insurance cover volunteer committee decisions and activities?
So, if from the standpoint of, so are these volunteer workers, are these board members, or is this a separate subcommittee?
It said volunteer committees, so I imagine maybe it's the landscaping committee or buildings and
Okay.
grounds.
So that is actually a really interesting question. And I'll make a note to get back with Sarah on that one because from the standpoint of what I would go with as the correct answer, so this is me, what I would think. I would say no from the standpoint of the designated officials in an insurance policy are very important. Adding the property managers as an additional insured is very important. So if these aren't directly board of directors members, that would be something where maybe a separate policy would be purchased or something from that nature. But I want to go ahead and double check and verify that from the
But
standpoint.
activities, so if we're doing like a landscape cleanup or a community cleanup, that would be covered
Yeah,
under
that would be covered 100% if it originates from the board of directors.
just the thing about the decisions, which
Yeah.
generally committees should be making recommendations to the board, and the board has the final decision on the
Yeah,
topic.
if the board is executing any decisions that the landscaping committee decides, yes.
Okay. And next one, if we have a bank account get hacked, does the computer crime coverage apply?
So from the standpoint of if your bank account is hacked, it would become a process from the standpoint of where the liability originates from. So let's say this is something that occurs from the bank itself. It's not a community association manager or property manager that caused the hack. That would be the bank's responsibility. But obviously, your accounts protection, personal accounts protection, that would be covered by crime coverage.
Okay. This kind of segues into it a little bit, but what about if a board member has access to a reserve account and takes money from the reserve account or EJF or management company, because EJF would never do that, but it's
Yeah. So I'm if you guys read the news, there was a management company that this actually did occur with in the Northern Virginia area. And so essentially anyone that had their crime coverage with the proper limits, their funds were paid back for by insurance. And then what essentially the insurance companies will do after that, it's called subrogation, or in this case, litigation, since it was a criminal act. And then so essentially the insurance companies would go after the community manager who went ahead and committed these crimes. So yes, if you have crime coverage for your community, your employee fidelity, that is employee dishonesty, someone stealing from the community, so that would be covered.
And we have our own fidelity coverage as a management company to protect
Yeah,
the funds of
of
which we're entrusted. So,
of course, yes, yeah, and even on a package policy, that would be covered. Standalone definitely would cover it, but a package policy as well because that is by definition employee dishonesty. So that would be covered in both instances. Since we're kind of going back and forth between the differences, I can confidently say that would be covered by both.
okay. Any other questions? I think we've gotten it all. It's only 12:30. A little short webinar for us today, but we will have more next month. Well, thank you so much for your time, Chris, and thank you, volunteer board members, for joining. I know it's time out of your day, but it's appreciated and glad you found some time to get information to help better your communities and making decisions. So, all
Of
right.
course, yeah. And feel free after this webinar, if you have any further questions, Sarah can reach out to me and I can go ahead and get those answers for you guys as well.
Okay, perfect. Well,
All right.
have a
Thank
wonderful
you
rest of your
guys.
day. Bye.
Bye bye.